Well, the market didn't panic today. People did. Prices moved, sentiment stayed pinned in fear, and timelines filled the gap with explanations. But when you slow it down, nothing actually broke. Bitcoin didn't lose structure. Ethereum didn't lose trend context. Solana didn't lose relevance. What we're watching right now isn't a collapse, it's a compression. And compression always feels uncomfortable right before clarity shows up. Today, we're going to walk through what the charts are actually saying, why fear is elevated but not decisive, and how regulation and liquidity quietly frame what comes next. No predictions, no panic, just signal. This is the SENB Daily Brief for Friday, December 19th, 2025. Let's start with the market, calmly.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
And we're back. When you zoom out, the story simplifies. Bitcoin is still holding inside a broader range. Lower highs, yes, but no structural breakdown. Momentum slowed. Selling pressure eased. Volatility compressed. That's not capitulation. That's indecision. Ethereum looks similar. Downtrend intact, but selling is becoming less aggressive, not more. Prices reacting to levels, not free-falling through them. Solana, still in a controlled channel. Despite the noise, it's behaving like an asset digesting prior gains, not abandoning its narrative. And XRP continues to trade defensively, moving with the market, not against it. Across the board, this isn't chaos. It's a market waiting. So if price action feels frustrating, that's because resolution hasn't been chosen yet. To understand why people feel uneasy here, you have to look at sentiment. So that's what we'll do next, after this.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, so the fear and greed index is sitting deep in fear, low 20s. Historically, that's not where bull markets end. That's where conviction gets tested. Fear doesn't mean the market is wrong. It means participants are uncertain. And uncertainty is where positioning resets. Now layer in Bitcoin dominance, near 59%. That tells you something important. Capital didn't leave crypto. It rotated. Risk moved inward. Defensiveness increased. That's not collapse behavior. That's preservation behavior. When markets actually break, dominance spikes violently and liquidity disappears. We're not seeing that. We're seeing caution. So fear is elevated, but structure is intact. And that's where today's deeper story begins. Because once you move past price and sentiment, you run into two forces that have actually been driving this cycle: regulatory clarity and liquidity. So let's talk about that when we come back.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
Welcome back, everyone. There's a lot of noise today, but underneath it, the same two themes keep surfacing from completely different corners of the market: regulatory clarity and liquidity. Everything else is just the argument around those two forces. Let's start with the political tension. Charles Hoskinson says Trump's meme coin changed the tone, that it turned crypto from a bipartisan policy discussion into a partisan liability. And, to be fair, there's some truth there. Timing matters, optics matter, and politics absolutely reacts to narratives. But here's the key distinction. That slowed the conversation. It didn't stop it. Because while Hoskinson is warning about optics, Brian Armstrong is talking about substance. According to Armstrong, roughly 90% of the Market Structure Clarity Act is already agreed upon. Not debated, not hypothetical. Agreed. Committees are drafting. Language is converging. And early 2026 is now the working window. That doesn't sound like a bill that died. It sounds like a bill that's waiting for the politics to cool off. Now zoom out, because while Washington argues about rules, the global system is quietly dealing with math. Arthur Hayes says the Fed's new reserve management purchases are just quantitative easing with a different label. And Raoul Pal goes even further, arguing that debt servicing alone forces liquidity into the system whether policymakers want it or not. You can argue the numbers, you can debate the labels, but the direction? More liquidity is coming. Not because of crypto, not because of politics, but because the system can't function without it. And this is where the two threads meet. You don't get sustained all-time highs without clarity, and you don't get explosive upside without liquidity. That's the formula. Not meme coins, not headlines, not Twitter fights. So, when people talk about 2026, they're not predicting a date. They're watching for those two ingredients to finish aligning. And right now, both are moving, just not loudly. Up next, we're going to step away from the macro for a moment and hear directly from the community what you're seeing, what you're questioning, and where sentiment really is. That's coming up in the Proof of Thought mailbag.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
All right, let's hear from the room. Because when markets get quiet, the smartest signals usually come from the comments. This one comes from @ChainSignal and reads, if the Clarity Act really passes and liquidity turns back on, does that mean 2026 all-time highs are basically inevitable? Short answer, nothing is inevitable, but this is how conditions get built. Clarity removes friction. Liquidity adds fuel. You don't need hype for a new cycle. You need permission and capital. That's what people are actually reacting to right now. This one's from @MacroQuietly. Feels like the market is waiting for rules before it moves again. Yes, exactly that. Institutions don't front-run chaos. They wait for frameworks. When rules get clearer, positioning gets easier. That's why regulation isn't bearish anymore. It's a green light once it's real. And this one from @LiquidityLarry. Already a strong name choice. Isn't RMP just QE with better branding? The Fed says no. Markets say maybe. What matters isn't the label. It's whether liquidity stops tightening and starts flowing again. Bitcoin doesn't trade on press releases. It trades on conditions. So when you zoom out, the community sees it clearly. Rules unlock participation. Liquidity unlocks price discovery. And time does the rest. Fear fills the gaps before those things resolve. But cycles don't restart on fear. They restart on clarity and cash. And that's why this moment matters more than today's candle. Let's wrap this up with a few final thoughts. What actually matters heading into the weekend and what doesn't. That's next.
You're listening to the SENB Daily Brief, powered by Whole Shot Coffee.
So here's where we actually are. Not in euphoria, not in collapse, not in some secret conspiracy moment. We're in a transition phase. Markets aren't moving because of headlines. They're moving because two things are slowly lining up: clarity and liquidity. Rules tell capital where it's allowed to go. Liquidity determines how fast it can move. When both start to align, cycles don't explode overnight. They build quietly. Fear doesn't mean failure. Fear means uncertainty. And uncertainty is what shows up right before frameworks harden and money re-enters. That's why days like this feel uncomfortable. Prices chop, narratives conflict. Everyone wants certainty now. But markets don't reward impatience. They reward positioning before the story becomes obvious. If 2026 brings new all-time highs, it won't be because of one speech, one bill, or one liquidity headline. It'll be because rules got clearer, liquidity turned back on, and time did its job. That's it. No magic, no drama. That's it for today's SENB Daily Brief. If this helped you think clearly, share it with someone who's drowning in noise. And if you've got a proof of thought for tomorrow, drop it below. I read them. I'm SENB Hero. Stay calm, stay curious, and we'll see you tomorrow. The SENB Daily Brief is a production of SENB Hero Media in collaboration with Whole Shot Coffee, coffee that fuels champion. Written and hosted by yours truly, SENB Hero. Production, editing, and scheduling handled by Maya Valencia, who somehow keeps me on time, caffeinated, and occasionally polite. Original theme music composed and produced by Paul Hahn, the community legend whose beats hit harder than a Fed rate hike. Research support provided by the SENB community. Proof that sarcasm and spreadsheets can coexist. For more shows, merch, and on-chain chaos, visit SENBHeroMedia.com. Thanks for tuning in. Stay caffeinated. And remember, if it's not in the brief, it probably wasn't bullish anyway.
Set my wallet free.